Hello, welcome to this channel called Level Up Investing. I'm Jason, and in this video I want to talk about the top 12 strategies we use for real estate investing. Okay, so the first strategy is timing, and it is very important to understand that real estate investing is not the right thing to do for everyone, and it's not necessarily the right thing based on timing. If you are having a lot of financial challenges, if you're drowning in school debt or credit card debt, and you don't have any cash reserves, and your credit score is not very good, a whole list of things, then the timing is probably not right for you to get into real estate investing. Now, if you are in a better situation, then the timing could be right. What I like to think about it is timing needs to be right, but it does not need to be perfect. And I say that because some people, they feel like they have to have all their finances perfect and know everything and studied everything in order to start investing in real estate. That is not the case. You can do very well investing in real estate without knowing everything, but you do need to make sure that your timing is right. It doesn't have to be perfect. Okay, so strategy number 2 is invest in real estate for cash flow. It's important to keep in mind that some people invest in cash flow versus appreciation, and what's important is that you make sure you are investing for cash flow. This is the strategy that we've used to generate positive cash flow every month with your real estate investing, and not to rely on appreciation as the sole reason for you to invest in real estate. So definitely invest in cash flow. So strategy number 3, do not count on appreciation, just like I mentioned, because based on the market conditions, based on the location of the real estate, there may not be appreciation, or there may be a significant amount of time before there's any appreciation on the property. So you don't want to count on that. You want to, again, focus on the cash flow as opposed to appreciation. Strategy number 4 is check your emotions. So whether you are purchasing real estate as your primary residence, or you're getting a rental property or a commercial property, you want to make sure that you check your emotions and that you are making decisions, making the purchases based on numbers, based on facts. And some people say you never want to fall in love with a property. That's exactly right. You want to be able to walk away from the property if the numbers are not right, and it's much better to do so rather than get into a deal that you're going to regret later. So keep your emotions in check throughout the whole process. Strategy number 5, make sure you get a personal financial statement together, or a PFS. It's just a good practice to know what your assets are, what your liabilities are, know what the numbers are, at least current to about 6 months worth. So if you get to a point where you see a deal, see a property you want to get, and you want to get some funding for it from a bank, that's the first thing they're going to know is what are your assets, what are your liabilities. So if you have a personal financial statement ready to go, you'll be ahead of the game. And you can see examples of that online under a PFS, personal financial statement. Strategy number 6, and by the way, in case you're wondering what it's like to live with a couple toddlers, well, here it is. So strategy number 6, get familiar with and get comfortable with talking with bankers and mortgage brokers. And that way, again, you'll be ahead of the game when it comes time to getting a deal, especially if it's a really good deal and you're going to get competition. The quicker you can get to the funding and getting pre-approval letters, the better chance you're going to have for getting those deals. So get to know the bankers, know that it's the banks that will help you get into deals that otherwise you would not be able to get into. So you want to make sure you have good relationships with them. Strategy number 7, with every interaction that you have during your real estate investing process, with every interaction, learn something. Learn something from every meeting, whether it's with a real estate agent or a broker or a contractor who you need to fix a property, or a home inspector or a banker. Learn something from every interaction, because you will utilize that information on the next deal. Strategy number 8, make sure you run your own numbers. You never want to rely on the numbers given to you by a seller. For example, the seller will say, hey, the average market rent for this type of apartment, this 1 bedroom, 1 bath, is $650 a month in this market. Well, you got to make sure you review that yourself. You look at Rentometer or Craigslist or some other source when you're calculating your numbers, and you have to run the numbers yourself in order to know whether this is a good deal or not. Never trust the seller's numbers. Strategy number 9, learn how to do your own home inspection. Try to have a foundation, or at least the basics of what you want to look out for. Like, get to know what it looks like if there's foundational issues, as opposed to just cracks in the drywall. Get to know some of the signs of pests, looking at things like signs of residual wings in the windowsills. So that's the kind of thing you can see when you're looking at a property yourself, either by yourself if you're an agent or with an agent, because sometimes you don't have the time or the luxury of getting a formal home inspection, because you might be in quick negotiations to get this property, and if you forego a home inspection, which you would want to do very rarely, but if you had to do that, you'd have to rely on your own inspection to make sure you're at least canceling out the big issues. So definitely want to learn how to do your own set of inspections when you're looking at a property. Strategy number 10, make sure you recognize that what you have in your own bank account, in your own pocket, is only one source of funding. And like I mentioned earlier, you want to get to know bankers and mortgage brokers, but there's also other options. There's things like HELOCing, and there's hard money loans, and there's partnerships. So there's a lot of ways to generate funding for property. So just realize, first of all, that what you have in the bank is only one form of funding, and there are many ways that you can generate funding to get a property. Strategy number 11, make sure you do your homework so that you can ask good questions, smart questions. When I say do your homework, really look up the property, look up the tax records, look up the county records, the sale history, and any previous reports, any seller's disclosures, home inspections, and you really want to do your homework so that when you're talking with the seller or the seller's agent, you can ask very pointed questions and you can get to the key information that you need that'll help determine if this is the right property for you. So definitely do your homework, not just on the property, but also on your own funding and talking to the banks like mentioned before, and you'll be much better prepared for getting a real estate investment. And finally, strategy number 12, when it comes to having a real estate agent, whether it's residential or commercial, be very picky about your agent. Make sure that your agent is working for you and they're not working for themselves, and you'll know what that means as soon as you start working with them. You make sure that you are able to find the best agent, and if you have to fire the agent and find someone else, then you got to do that. because that's what you need to do. And I decided to get my real estate license because I decided I wanted to be my own agent and be able to look at properties a lot faster than if I had to rely on someone else. That's a choice, and there's definitely pros and cons to that, but the key is that you want to be very picky about your agent. Either find a good one or be one for yourself. Okay, so that was a quick rundown on the top 12 strategies that we use for real estate investing. We hope to see you on the next video.